Vodafone deal, which happened in 2007. The quantum tax demand by the Indian revenue authorities in this particular case was around 11,000 Indian crores of Indian rupees plus interest. Crores.
Excuse me, what kind of company ang Vodafone?
Later on, I'll discuss. So, these basic terms will have an effect in the report soon. So, a merger involved a mutual decision of two companies to combine and become one entity, while the acquisition is a purchase of
restructuring.
Yes. Acquisition is purchase of one company by another, in which no new company is formed. And of course, tax haven, as we have discussed in the previous days, is a state, country, or territory where certain taxes are levied at a lower rates or no taxes at all.
So magic yun. Kasi nag-restructure no new.
So who is Vodafone? Vodafone Group PLC Inc. is a world's leading mobile telecommunication based in England.
Parang Globe.
It is world's second largest mobile operator in terms of subscribers and largest in terms of revenue. It has significant presence in Europe, Middle East, Africa, Asia Pacific, and US through its subsidiary undertakings, joint ventures, associated undertakings, and investments. Germany, US, and India are the largest markets of Vodafone.
Yes.
And Vodafone Group has entered into arrangement with network operators in countries where the group does not own any equity stakes under the terms of these partner markets agreements. Vodafone and its partner operators cooperate in marketing of global products and services with varying levels of brand association. So, doon pumapasok yung transfer pricing transactions ng Vodafone. So, the companies involved in the transaction is the Hutchison Whampoa Limited. Hutchison Whampoa Limited of Hong Kong is one of the largest companies listed in Hong Kong Stock Exchange, with a diverse array of holdings which includes the world's biggest port and telecommunication operations in 54 countries. Wow. Flagship companies includes the Hutchison Telecommunication International Limited, who holds 100% shares in CGP Investment Holdings Limited. So please take note of the companies, the Hutchison Telecommunication Inc. Limited and the CGP Investment Holdings. So bear in mind that Hutchison Telecommunication Inc. holds 100% of CGP Investment Holdings. CGP Investment Holdings Limited is a company situated in Cayman Island, Mauritius, which is a tax haven country. It holds 67% share in Hutch SR Limited, which is located in India. So please take note of the locations of each company because it has a direct effect in the transaction. And then the Vodafone International Holdings, which is situated in Netherlands and a subsidiary of Vodafone Group PLC. And then the SR Group. The SR Group is a multinational conglomerate headquartered at Mumbai, India. SR began as a construction company in 1969 and diversified into manufacturing, services, and retail. SR has a footprint over Asia, Africa, Europe, and America. So SR Group is a big company as well. And this is the main company, the Hutchison SR Limited. A company incorporated in India in 1994 and is a joint venture of Hong Kong-based Hutchison Telecommunication International Limited, which is the Hutch Hong Kong, and the India-based SR Group. So there's a joint venture of the two companies. Hutch India was in the business of providing telecommunication service in India, mostly at yung mga call centers in Ahmedabad, India. Hutch Hong Kong held 67% of the shares of Hutch India through CGP Holdings Limited, which is the one situated in Cayman Island. And they call it the Cayman Island Special Purpose Vehicle. Why? Because, of course, it's a strategy. It's a tax haven country. And SPV registered in Cayman and some other headquarters. Now, what happened? Vodafone International Holdings, which is a Dutch company, purchased shares of Cayman companies or the CGP Investment Holdings Limited, from a foreign company, Hutchison Telecommunication Limited, for a consideration of $11.2 billion. CGP Investment, in turn, held 67% stake of an Indian telecom, which is Hutch SR, through intermediate companies situated in Mauritius, that's the Cayman Island. The sale ultimately resulted in the ownership of Hutch SR by Vodafone International Holdings. So technically, nakuha na ni Vodafone International Holdings yung Hutch SR. Parang strategy, diba? Parang binili niya yung CGP kasi ang gusto niya is makuha yung Hutch SR, which is the telecommunication company in India. Now, the Indian Foreign Investment Promotion Boards approved the said transaction on the condition that Vodafone would comply with the Indian municipal laws. Pursuant to the consent of SR Group, a new joint venture called Vodafone SR Limited came into existence. So, I made an illustration here. So, the Hutchison Telecommunications International, he bought CGP Investment Holdings. Vodafone International Holdings bought HTIL, or the Hutchison International Holdings, who is the owner of CGP Investments Limited, who owns 67% of the SR Limited, and made it to a joint venture called the Vodafone SR Limited in India. No, the CGP investment is the one situated in Cayman Island. However, it owns 67% of Hutch SR. So if Vodafone purchased HTIL, no, that's in Hong Kong. Yeah. So if binenta or binili ni Vodafone International Holdings si CGP from HTIL, it means he also owns the Hutch SR Limited, which is an Indian company. But take note that hindi niya binili si Hutch SR, ang binili niya is si CGP. Yes, Cayman Island. So, as you can see, nandun na yung gulo, yung situation. Now, as a result of this sale, capital gains estimated at $2 billion accrued to the CGP Cayman. Considered from the point of view of the jurisdictions, it is clear that the sale transaction took place between Vodafone International Holdings and CGP Cayman. So that's from two different countries, which is the which is the Netherlands from Vodafone International Holdings and Cayman Islands. The ultimate effect, however, was the transfer of controlling shares of the Indian company, which is the Hutch India or the Hutch SR Limited. Since the deal was offshore, neither party thought it was taxable in India. But the tax department disagreed. It claimed that capital gains tax, most people paid on the transaction, and the tax should have been deducted by Vodafone whilst paying Hutch. So, yeah. The Income Tax Department has claimed capital gains under Section 9 of the Income Tax Act, as it is of view that the transaction involved transfer of an Indian asset and that the profit made by HTIL from the sale of shares to Vodafone was generated in India. Therefore, Vodafone had an obligation to pay withholding tax in India before making payment to purchase to HTIL. The Indian authorities demanding 11,000 crores of Indian rupees. The matter went to court. So, kaya siya makapal actually. Kasi galing siya, di ba sa Indian tax authorities, dinala niya yun sa Bombay High Court. However, ito yung naging decision ni Bombay High Court. So, in September 2007, the tax department issued a show cause notice to Vodafone to explain why tax was not withheld on payments made to HTIL in relation to the above transactions. The tax department contended that the transaction of transfer of shares in CGP had the effect of indirect transfer of assets situated in India. Vodafone filed a writ petition in the Indian Bombay High Court, inter alia, challenging the jurisdiction of the tax authorities in the matter. by its order dated December 3, 2008, the Bombay High Court held that the tax authorities has made out a prima facie case that the transaction was one of transfer of a capital asset situated in India, and accordingly, the Indian income tax authorities has jurisdiction over the matter. So, of course, we all know what a capital asset is. So, medyo malaki yung magiging role niya pag dumating na yung decision ni Supreme Court later on. So, Vodafone challenged the order of the Bombay High Court before the Supreme Court. In its ruling dated January 23, 2009, the Supreme Court directed that the tax authorities to first determine the jurisdictional challenge raised by Vodafone. It also permitted Vodafone to challenge the decision of the tax authorities on the preliminary issue of the jurisdiction before the High Court. So initially, as you can see, parang parang nananalo or parang napupunta or nag-agree si Bombay High Court doon sa Indian Tax Division. That's what we thought. In May 2010, the tax authorities held that they had jurisdiction to proceed against Vodafone for the alleged failure to withhold tax for payments made under Section 201 of their Income Tax Act. This order of the tax authorities was challenged again by Vodafone before the Bombay High Court. But by its order dated September 8, 2010, the Bombay High Court dismissed Vodafone's challenge to the order passed by the tax authorities. Vodafone filed a special leave petition against the High Court order before the Supreme Court. Matigas yung ulo ni Vodafone in this case. On November 26, 2010, SLP was admitted and the Supreme Court directed Vodafone to deposit a sum of Indian rupees 25,000 million within 3 weeks and provide a bank guarantee of Indian rupees 85 million within 8 weeks bond from the date of its order. Hindi ulit pumayag si Vodafone. Vodafone argued the transaction took place between offshore entities owned by itself, and Hutchison was outside India's jurisdiction. And moreover, the deal was not taxable in India as the funds were paid outside India for the purchase of shares in an offshore company. Vodafone's contention was that the provisions were not applicable as the primary obligation to discharge the tax was with the payee, which is the HTIL. Moreover, withholding tax provisions cannot have extraterritorial application and is applied to companies of Indian residences only. Sabi naman ng Indian tax authority.
So, Vodafone is not a resident of India.
No.
HTIL is also not a resident of India.
No.
CGP is also not a resident of India. Only
SR, which is owned 67% owned by CGP in Cayman Islands. And since Vodafone International Holdings purchased CGP,
so they're asking a non-resident of India to withhold from a non-resident of India for sale of an Indian company under a CGP or Cayman Islands.
Kasi kaya may sense yung argument nila.
Actually, in India, nakita nila yung transaction.
Yes, nakita ng India, in fairness kay India. But, later, arguments of tax authority or this Indian tax authority. Tax department seeks to show that since most of the assets were in India, since it's a call center company, the deal was liable to Indian capital gains tax. Hutch had sold Vodafone valuable rights, including tag-along rights, management rights, and the right to do business in India, and that the offshore transactions had resulted in Vodafone having operational control over the Indian asset, which is the second largest telecom provider in India. Of course, it makes billions kasi second largest telecom service provider siya in India eh. So talagang flowery siya sa mata ng mga companies and then tax authorities. The tax authorities' argument was focused on proving that even though the Vodafone Hutch deal was offshore, it was taxable as the underlying asset was in India. And so it pointed out that the capital asset, that is the Hutch SR, or now the Vodafone SR, joint venture is situated here and was central to the valuation of the offshore terms. It also argues that under Indian law, the buyer is in a deal is required to withhold any capital gains, tax liability, and to pay it to the treasury.
So without CGP in the Philippines, the same thing, no? Taxable talaga yung transaction. Without
Yes.
CGP. Okay, same thing.
And then this is how they treat the capital gains on extraterritorial transactions on their country. The Indian Parliament, under provisions of the Constitution, has the competence to enact a legislation having an extraterritorial application, but it is unsure whether the Income Tax Act has such power. See the loopholes. Dun pa lang sa nila, sa mismong batas nila, hindi nakakaagad clearly stated, but that's not all. According to Section 9 ng Income Tax Act, where a non-resident earns any income by transfer of capital asset in India, whether direct or indirect, the capital gains tax would apply. But Section 9 does not state that the transfer of capital asset can be direct or indirect. It is only income which can be direct or indirect. So, income, of course,
Ordinary.
yeah, but the capital asset,
income.
hindi siya clear. Pursuant to Section 195 of the Act, every person paying any sum which is chargeable to the tax in India to a non-resident must deduct income tax at source or withholding tax at the time of payment or credit. This applies to both residents as well as non-residents. So,
May
loopholes yung batas nila. So, dinala nila, the Vodafone, of course, brought it to the High Court or the Indian Supreme Court, and this is the judgment. Sorry. After a detailed hearing before a three-judge bench headed by the Chief Justice of India, the Supreme Court delivered its verdict on the case on January 2012. The key highlights of the decisions are as under interpretation of Section 9 of the Act, as per the said section, inter alia, income accruing or arising directly or indirectly from the transfer of a capital asset situated in India is deemed to accrue or arise in India in the hands of a non-resident. The Indian Tax Authority has no jurisdiction to the tax
Panalo siya.
under foreign transactions. A sale of shares was in Cayman Island. Yeah. Ang galing ng Vodafone. In connection with the above, the Supreme Court observed that charge to capital gains under Section 9 of the Act arises on the existence of three elements, which is the transfer existence of a capital asset and the situation of such asset or the location in India. The legislature has not used the words indirect transfer in Section 9 as part of the Act, and if the word indirect is read into Section 9 of the Act, then the phrase capital asset situated in India would be rendered nugatory or invalid. Section 9 of the Act does not have look-through provisions, and it cannot be extended to cover indirect transfers of capital asset or property situated in India. The transfer of rights and entitlements, ito yung mga in-appeals nila, but they actually had 14 appeals, but masyado siyang mahaba para i-discuss. And it's not covered, since it is not covered in the definition of capital assets. So, lahat ng appeals na yun, binasura lang ni Supreme Court. So, yun. As capital asset is not taxable in India, so there is no question of deducting tax at source under Section 195 of the Act. Nawala, yes. So, nawala lahat ng mga initial na verdicts ni Indian Tax Authority. And accordingly, Supreme Court concluded that the transfer of the share in CGP did not result in the transfer of a capital asset situated in India, and gains from such transfer could not be subject to Indian tax. So, kawawa kasi.
Kaya yung HITL na isinigipin niya from the very start.
Yes.
Sakin na natin.
Yes. May isang article na nabasa na inaay na ni Vodafone, ni HTIL from the very beginning, yung sale ni CGP.
Kaya nga, gumawa lang sila ng scheme in order that it will
it's a matter of tax avoidance. Parang yun talaga yung
Kaya ang galing sila mag-isip.
By form of that, by way of that. So what's the conclusion? For the reasons discussed above, the Supreme Court delivered its verdict in the Vodafone case 1, putting an end to the nearly 5-year-old controversy surrounding taxability in India of offshore transfer of shares of the Cayman Islands company by the Hutchison Group to the Vodafone Group. In a landmark decision, the Supreme Court reversed the decision of the Bombay High Court and held that the Indian tax authorities did not have territorial jurisdiction to tax the offshore transactions, and therefore, Vodafone was not liable to withhold Indian taxes. The Supreme Court held that gains arising from such transactions were not liable to tax in India, and that therefore, there was no obligation on Vodafone to deduct the tax at source. In view of the above, the Supreme Court has directed that the tax authority to return, of course, the bond of 25 million Indian rupees, which was earlier deposited by Vodafone along with 4% interest, and return the above guarantee. So, nanalo pa rin si Vodafone. Dahil, yes, kumita pa siya kasi nagkaroon na din. So, yeah, what happens afterwards? Actually, the report is finished, but I have read something. What happens afterwards? Now, the company approached that, of course, the Vodafone approached the Income Tax Appellate Tribunal, saying it was not an international transactions, and since nabigay na yung rulings, gusto ni Indian Tax Division na mag-create sila ng batas or i-ayos nila yung loopholes nung tax act nila.
Because of that.
Yeah, specifically the capital assets, because nagiging strategy ng mga call center companies or the mga multinational companies sa India, yung nag-create sila or nag-merge na nag-acquire ng mga companies, and then nag-avoid sila ng tax. So, sabi ni court, sure. And this is in the form of advanced pricing agreement. So, nagkaroon sila ng agreement between the taxpayer and the tax authority determining the transfer pricing methodology for pricing the taxpayers' international transactions for future years. So, ang gusto ni, since nagkaroon sila ng gano'n na batas, ang gusto ni Indian Tax Authority is to have it affected retrospectively. Yes. But,
Kasi ang
Indian Tax Authority. Pero, magbibigay ako, ayusin ko to, ito yung resolution ko, but you have to make it effective retrospectively. Yes. From the very beginning, going back to this.
Because tax laws can be applied retrospectively, depending on the term of the law itself.
Yes.
Nasa mga congressman ng India, magbabayad ako sa kanila. Kasi boto ko. Ito perspective ko, kaya ako lang ng congressman. Okay, go.
Yeah. However, based on government further reform, okay, na-reform nila through advanced pricing agreement, but it has not been, up until now, parang ang initial decision kasi ni, well, kasi napapasa na batas, up until now, regarding those respective obligations. However, ang gusto or mostly ng pinagtatalunan nila is if prospective yung magiging obligation or retrospective. Opo, para maiwas sila to. But if mag-agree sa Supreme Court dun sa, or yung Senate nila, or yung tribunal nila na maging retrospective, babalik at babalik ulit.
So the next battle of Vodafone is to the constitutional in a retrospective taxation. Okay.
And the international